Good morning, everyone. Welcome to the Quantum Leap Futures Morning Leap session for Tuesday, June the 12th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is going to take about 20 to 25 minutes on average. If you're watching this video and you don't want the context, I think you need it. It's important to do the work and understand where the levels come from. You can skip ahead, and usually the hypos come around 15 to 17 minutes into the video. This is a subscription room. If you're interested in checking out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis for our members during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, your own risk metrics. Taking a look at yesterday, our main hypo yesterday was an open auction just in range and in value, but by the time we got to the open, we were trading above the prior day. Now, my main hypothesis was to open in the upper distribution and test down into the LVN that separated the two, and then find buyers and rotate up, with our main target being between the 91.75 and the 93.50. Well, it kind of shifted because of the fact that we opened above range. We came down, tested, we got one tick inside of the prior day range, tested the value area high, and then rotated up and held the open on the retest, went sideways at the overnight high, and then pushed up into that 93.50 area with a little poke above at 94.25. Well, then we just sort of chopped around. It looked like we were going to hold up there, but into the close, they rotated it back down into the overnight high at the 86.50 area, came down and tested the open at the what was the open 84.50. And then rallied slightly into the close. So we held the prior day high, left the gap alone, and we still have this gap down here at 82.50. Now, the actual low down there is a weak low. We have multiple session lows and highs in this 83 to 82 area. We did dip down in the overnight and tested the 82.25, and then we were trading in this lower distribution and just basically chopping to the LVN and failing, and then just trading the range, and then on the news. We rotated up to the 92 area. We did not get back, to the 94. So we held inside of the prior day upper distribution, and then, with the, summit being, a lot of rhetoric in the summit in terms of, nothing really got done. They didn't really agree to anything. There's no specifics. I mean, the press just ripped apart the whole thing without realizing the significance of just the meeting itself and the agreement to move ahead. So the market drifted down into breaking the prior day low, came down here, put a lower low in, and then we've rallied on the core CPI numbers. So you can see, going to the news, the 8:30 core CPI was a beat. CPI year over year was a beat. CPI index was a beat. Real earnings was a beat. Basically came out as expected on the core index for May. And same thing. So it was good news. Market rallied a bit, and and we're seeing some push to the high side again. We have Red Book coming out in 4 minutes, not usually a big one. Not much else today in terms of the news. We've got 4-week bill auction. We've got the WASDE report at noon. We've got the 30-year bond at 1, and then 2 o'clock we've got the federal budget. Don't forget that we have the Fed announcement and the rate announcement tomorrow at 2 o'clock. So that will probably have us find some balance at some point in time in the afternoon and go sideways into the close. Each morning, I like to start my day with a simple candlestick. Excuse me for 1 second. Each morning I like to start with a simple routine. I do the same thing every day. I start with a basic candlestick chart using a 9 EMA and a 20 SMA. And what I'm doing is I'm looking to see where we are in terms of the trend on the different time frames. And then I work my way down from the monthly, weekly, daily, intraday, just to see, so I don't get myself biased in one direction or not, understanding that the bigger picture can still play out in the OTF at any time, can step in. In terms of the bigger picture, we have great slope, good separation, prices paralleling the 9. We get 14 months of one time framing up. In February, they break the one time framing. We come down, we challenge the 9, but we do not close below the 9, and we bounced off it in June so far. We're making a higher high from the prior month. We've got good slope, good separation. We don't even challenge the trend on the bigger picture until we get to the 2670 area. We don't even violate the trend until we get to the lower 2500s. So this trend and any pullback is just a pullback. It doesn't mean anything in the bigger picture right now. In the weekly, it looked like we were going to roll over. We were below the 9 and the 20, but then they took it back, they fought it, and then we got the cross on the moving averages, and now we've got a continuation pattern on the weekly to continue the trend to the upside. On the daily, you can see that we came down and challenged the 20, held, got back above the 9. Now we've got good slope, good separation. Prices paralleling the 9 nicely. Trend is very much intact on the daily as well. That doesn't get challenged until we come back to the 2767 area. And remember that 2769 area is going to be significant. Going into the intraday, you can see that same thing. We got good slope, good separation. We're losing a little bit of slope. They're kind of balancing out here after breaking out of the value area that we are in the microcomposite that runs from February the 2nd through to today. But we are above the 9 and the 20, and the trend is still intact to the upside. On the 30-minute, we're in this bit of a downward trend off of the summit news. The core CPI took it back, and now we're pushing, and we're above the 9 and the 20. So in terms of the trend, we're pretty much still in an upward trend in almost all the time frames leading into the RTH session. So let's take a look at the structure, get a little bit of dialogue here. Why is my profile all wrong? Hold on a second, I just gotta fix this. I don't know why this is like that. All right, so we have this, this balancing down here in the 2500s. They break out, they hold value, then they go into the trend and they trend up and they go up and make new all-time highs. This all-time high is unequalized. What do I mean by that? The RTH, the regular trading hour all-time high, which is this chart, this is only the RTH session, is 2884. But the actual all-time high is up to 2887 and a quarter, put in the Globex. That statistically never holds. they will come up in the RTH and challenge that. And we're coming up to the 2800s. If we can get into the 2800s again, I'm looking for a push up into this unequalized high. But they tried to hold value after putting in the all-time high. Then they gap down. They go all the way down to that former price acceptance area in the 25, 35 area. And then they find the buyers. We rotate up. We try to get back twice into the 2800s. We fail at a former price acceptance area. The sellers step in, and then we rotate back down and come back down, challenge back into the 2500s. Find buyers again with a higher low and come in, and then we've just been chopping in this large value area. Then we got the shift from the microcomposite VPOC, which was down at the 2669 area, shifted up to the 27, it was actually 271850, and our shorter time frame microcomposite, that value area microcomposite also accepts that longer time frame price acceptance. We find the buyers, and then we break out, we gap up, and we break out of the value area above the key line in the sand. In the June contract, it was 41.75, shifted to the 45.50 in the September contract. 2 days of balance, something that they usually do. They accept price higher after the breakout of value. Then we come up, and then the last 3 days we've been balancing here. And of course, now where are we? We put in a higher candle outside of value yesterday, held the prior day high, and currently we're trading above the value, the last 3 days value, with the VPOC being at the 2771. So they break out, they accept price, they move higher, they accept price, and now we're trying to continue the price discovery up. Very important level is going to be that 83. It is still a weak area, in terms of the last few sessions. We keep testing it, and if we don't hold it, then we're going to be coming back down into this value area, and I'd be looking for a pullback again down into the 71.50. We want to hold the 66 area. If we don't hold the 66 area, then on the daily we get a possible trend change, and the next destination would be the 55 or the 50.75, where the price was accepted just after the breakout. Key line in the sand below still remains at 27.45.50. Anything below that pushes back inside of the longer time frame value area, and I'd be looking for a move back down towards the 32 and 23 area and back into where the VPOC shifted just before the breakout of value. So taking a look at the overnight inventory. Overnight inventory is pretty balanced. We tested into the upper distribution of a double distribution day yesterday, currently coming up and testing that double distribution. We're seeing a VPOC shift here to that area. This is a good example of price acceptance at a price rejection area as they fight this level. So if we can get above that, look for them come up through the upper distribution and continue the trend. If we can't hold that level, then we're likely to rotate back down into yesterday's VPOC and yesterday's close to close the gap, and then push down and challenge this weak low that we've got between the 82.25 and the 83.25. So the inventory is pretty neutral. We've got a decent Gaussian distribution, but just like we've seen a lot of lately, this distribution zone is very boxy. That means that we're still, even within the shorter time frame, when the short time frame traders are trading, they can't even agree on price. Okay, and you get these boxy value areas that have multiple distributions, or what I call undetermined fair value. And we have to understand that you're going to be dealing with, until this changes, you're going to be dealing with swings of 2 to 3 points that come out of nowhere as we deal with low volume, and the algos are being able to whip it around at will. So taking a look at the levels, our overnight low is down at 82 and a quarter. Our overnight high is at 92. Our daily 20 period full session average true range is running at 25.71. So off of the overnight low, our daily upside ATR target is up here at 28.0775. And our off of the overnight high of 92, our daily downside ATR target is down here at that 66.75. Remember, we were just talking about that 66.75 down here. If we do not hold that 83, this would be my target between the 71 and the 66.75. So we have range capabilities of getting down into the 66.75 or testing up into the 2800s based on where our current overnight high or low. Now, if we put a higher high in, we have to adjust that, or if we put a lower low in, we have to adjust the levels. But currently, that gives us range capabilities into the 2800s or down into the mid 2700s based on the range without getting into price expansion. So we do have the double distribution. From yesterday, my over underline is going to be at that LVN, that 27.89. It also is now going to be our overnight VPOC as well. So I do expect to challenge this, on the open, to come back to it. This is the area you're most going to want to pay attention to today, because if we get below it, the probability is that we go down and close the gap. That gives you a nice three-point move, with the likelihood that we're probably going to push to the value area low down here and test that weak low and possibly take out the overnight low. So just this is our over underline. Our key lines in the sand above is up at the 28.0250, and then below is still down at that 45.50. Those, that seems like a long way away, but those are the key levels that we have to pay attention to, and those are our key lines in the sand. So in terms of hypotheses, we're going to open auction in range, in value, and currently right now, and again, this could change because we're doing this early, but we're in the upper distribution. So my main hypothesis is a balancing day coming into the FOMC, but because we're still in price discovery, my hypo 1 and hypo 2 are going to have equal weight, and it's basically going to be how we handle this 27.89. So hypo 1 is a open auction in range, in value, a push up into the 92 to 92.50, where the VPOC was before they stole it into the close yesterday. Find sellers here, rotate us down, battle this 89 area, filling in this, and then breaking down and pushing down into the 86, continuing down into the value area low at the 83 area, and then dip down, taking out the overnight low, which is a lower probability of taking out the overnight high and low, only 28%. But it's something that I'm looking for today, pushing down into the 79.50 area, basing, and then rotating back up and closing, okay, in the lower distribution around this 86. Remember that the 86.50 was our key line in the sand above at in sessions prior to this, and we battled that and turned price rejection into price acceptance, and looking to close in hypo 1 there. And hypo 2, I'm looking for an open auction in range, out of value, a move down into the 82 area, fail to break below the 82 or a false breakout, find buyers, rotate us back up into the 89, chop here, and then push up and continue the auction with the primary target being this 27.9850 area. And then possibly, if we can hold above the 94 area, a late day probe into the 2800. I don't expect to hold the 2800 into the close, I'm expecting to rotate back down and close somewhere in around this 93 to 94 area. That is hypo 2. Hypo 3 is a gap and go day, a failure to come down and take out the overnight, the prior day VPOC and close. The naked close is at 2786.50. Okay, come up, battle the 94.25, break above it, push up into the 98.50. Okay, go sideways and then push up into the rule of 10 and going into the 2800 10 area, and then possibly a late day probe up into the 13, but finding sellers and then closing somewhere between the 0775 and the 0250 and closing in the 2800s and solidifying our move back into the 2800s. That's hypo 3. Hypo 4 is a take back day, an open auction in range, failure to take out the overnight high, a move down, chop between the 86 and a quarter and 82 and a quarter, fail, push through down to the 74, chop here, come down to the 71, and then a late day probe to test the 66, find buyers down here, and then rotate up and close somewhere in around the 27.71 and come into tomorrow's Fed day down here in the 71, back into that 3-day micro composite VPOC that we found price acceptance at right here. After the breakout of the value area. So there is a fifth alternative, and that is an inside day and playing ping pong between the 92.50 and the 86 and quarter, and basically having a inside day as we fight this LVN. So that the alternative hypo is basically balanced within a 9 to 10 point range, but holding below the 94 and a quarter and above the 82 and a quarter, and just going sideways and chopping both distribution zones from yesterday. Going to gold. Where'd my gold chart go? Gold, again, just in this balancing area. The VPOC here is at the 1303. On the news, we did, we actually had a nice move from the 1302 area down into, what did it get to on the news? 9630, just above the composite VPOC. This composite VPOC goes all the way back to October the 24th, 2008. And, we're having trouble getting away from it, but they're still battling to try to hold the 1300s. We're now below the 1300. So this 1300, actually 1301, is going to be our over underline. If they can get above that, then I think they're going to come up and accept the value at the 1303 and then push up finally into the other side of this distribution zone up at the 1309 to 1311 area. If we don't get above the 1300 and they reject it on the next test, then I'm going to be looking to short back into this 95.90 with a look to push down into the value area low of the composite at 93, and then a break to push us down into the next destination point down here at the 1284.90 area. But I'm expecting gold, okay, to just continue to be choppy. The key lines in the sand is above the 09 and below the 1289. Until then, we're still in this balance area, and it's tough to trade gold, when we're in these balance areas. Anyway, that's going to complete our pre-market session. Remember that this is a subscription room. If you want to come in and check out the live trading, just send me an email at quantumleapfutures@gmail.com. As always, trade well, trade safe, and we'll catch you on the flip side.